Welcome to BigONE Weekly News Update. I'm Mia. The digital asset market extended its decline last week, with Bitcoin falling back below the critical $100,000 threshold and dragging broader crypto sentiment with it. The continued sell-off signals a deeper phase of deleveraging, which has now wiped out almost all year-to-date gains for BTC. Bitcoin drops 10% for the week, all coins under heavy pressure. Bitcoin closed the week down roughly 10% at $94,250, while Ethereum, ETH, lost about 14% to finish near $3,100. Solana, SOL, recorded one of the steepest corrections among major assets, tumbling 16.6% to $137. Among alternative tokens, only a limited group, including ZC, Aster, WLFI, and Uni, managed to post modest gains, while most altcoins followed the market lower. U.S. government reopens after record shutdown, markets remain cautious. The U.S. government reopened last Thursday following a record 43-day shutdown, but the extended closure has created significant reporting delays. With a backlog of economic releases and key datasets still pending, the Federal Reserve heads into the December FOMC meeting in what policymakers describe as a data fog. Hawkish commentary from Fed officials and valuation pressure in the AI sector weighed on U.S. equities. In contrast, Europe stocks 600 rose 1.77%. U.S. Treasury yields climbed to 4.15%, while gold gained 2.1% as investors sought safety. Bitcoin nearly erases its 2025 gains as ETF outflows surge. Over the weekend, BTC briefly dropped below $93,000, down more than $30,000, over 26%, from its October 6th intraday high of $126,000. With just 6 weeks left in 2025, cryptocurrencies are now at risk of becoming the worst-performing major asset class of the year if the downtrend persists. Spot Bitcoin ETFs saw more than $800 million in net outflows on Friday, the second-largest daily withdrawal since their launch in January 2024. Spot Bitcoin ETF position snapshot. Total net inflows since launch, $59 billion. Average fund cost basis is almost equal to $90,146. Unrealized profit remaining, $2.94 billion, is almost equal to 4.7%. Based on current prices, these investors would have earned higher returns over the past 22 months had they instead held money market funds or U.S. Treasuries. U.S. trading hours drive selling, retail exit intensifies. Over the last 3 months, Bitcoin has shown pronounced weakness during U.S. equity trading hours, while Asian sessions have been comparatively stable. The Coinbase Premium Index has remained negative for 18 consecutive days, signaling intensified selling pressure from offshore U.S.-linked markets and continued retail outflows. MicroStrategy, often tracked as a corporate indicator of Bitcoin sentiment, has seen 39% share price decline year-to-date. BTC Holdings premium to NAV dropped to 1.2. Market risk appetite fall to new cycle lows. Market maker stress and the path towards stabilization. The current downturn has been influenced in part by balance sheet stratification among Binance-associated market makers. However, as large holders finish repositioning and U.S. dollar liquidity gradually improves following the government's reopening, volatility could begin to moderate. Markets are now awaiting clarity on delayed macro data releases, including September non-farm payrolls and October PCE inflation, which may shape expectations going into 2026. The week ahead, November 17th to 21st. Macro focus. September non-farm payrolls, pending. October PCE price index, pending. Earnings to watch. NVIDIA, Walmart. Crypto calendar. Options expiration week. The crypto market is undergoing one of its most significant deleveraging phases since the early stages of the 2021 to 2022 downturn. Forced selling, ETF outflows, and thinning liquidity have created strong headwinds, but they may also be cleansing excess leverage from the system. While sentiment remains fragile and retail participation is fading, structural factors, such as institutional positioning, rising U.S. liquidity after the government's reopening, and the approaching 2026 Bitcoin halving, could help define a more constructive backdrop in the months ahead. For now, markets are likely to remain highly sensitive to macroeconomic data and ETF flow direction. Whether the current correction marks a late-cycle reset or the start of a longer bear phase may depend on how quickly risk appetite returns and how effectively leverage continues to unwind. Join BigONE today and take advantage of the growing cryptocurrency market.